To talking policy now, DEA Secy talks exclusively to ET now, says the nation has seen robust exports growth despite high oil prices. Executive Editor News Supriya Srinath began by asking if India remains insulated from the impact of recent trade tariffs that have marked a shift in the world.
The implications of what American president has done with respect to China and certain specific goods will need to be analyzed in terms of what those products are and where do we have any implications for our items for trade and all. But otherwise, you saw the data for the year and the fourth quarter release yesterday about India's exports and balance of payments, and also the May data which the Commerce Ministry released today. Our performance has been reasonably and in fact quite strong, with exports having gone up by 20%. This is one of the highest rates for quite some time. And despite the oil prices having risen substantially, May imports were only about 15% higher. So some of you are playing up as if the trade deficit has gone up sharply. It has gone hardly by any measure. The real bigger news was, I understand, in my judgment, that the exports grew by 20%, and despite the oil prices, right, which had the implications about $5–6 billion, our trade deficit was only about $700 or $800 million more. So as far as the implications of US action, I think we'll have to wait for some more time.
Most brokerages expect the current account deficit to touch levels of 2.5 to 2.7% in this financial year. There are obviously concerns as far as the twin deficits are concerned. Can the government do anything given that the crude prices have reversed the trend? Are there genuine fears on India's current account deficit?
Let me reassure, and that's my very considered assessment. 2 to 3% current account deficit for India is not at all a matter of worry. That's what is the way the world finances and transfers capital to India. So that kind of level should not be a worry at all. What might worry a bit is that do we have this going further beyond 3% or 2.5%. So that is something which we need to watch out, and it was in this context that when the oil prices were going beyond 80 or to that level, that was causing quite a deal of concern that in case that were to be the case, that how do we finance, because the supply of dollars and the demand of dollars, if there is a gap in that gap has to be met, and if that gap is not met, then the exchange rate tends to depreciate for us. That is what was the worry, but for the time being, for last 2 weeks to 3 weeks at least, one has seen the oil prices declining and also stabilizing, and the futures and other things are also telling us that the likelihood of the oil going beyond $75 and averaging at that is much less now.
Now, given the fact that you've been able to pass hikes up until now, you've got some breathing room. Is it now a given? Is it perhaps easy for us to presume here that now, because oil is cooled off a bit, the whole special formula and the whole partial deregulation that was being spoken about is no longer priority? Or will the government still look at partial deregulation to insulate consumers if prices were to go up?
No, my sense is that the system which is in place is good enough to continue for the situation in which we are. and we have examined various options which can be resorted to if the prices cross a certain comfort level. So I don't think it can be said forever that there is those options and the long-term solutions are off the table. They are not, and those would be discussed. And some urgency comes when the prices cross a certain threshold. At the current stage, that urgency is not there, but the search for the longer term solution continues.
Okay, let me turn focus, sir, and the Interim Finance Minister, Mr. Piyush Goyal, has suggested a committee should look into the formation of a bad bank. Now, why is the idea of a bad bank back on the table? What has really changed now? Because this was an idea that was toyed with earlier, it didn't quite go through. Do we have the funds to back it?
See, the fact that there are bad assets, the non-performing assets are, this is a fact, right? And in the system, the level at which the non-performing assets are there is quite high and elevated. These assets need to be resolved. These assets need to be restructured, resolved, sold, and whatever. So there are ways to deal with it, but those have to be dealt with. Now you have the options that you deal with it in the existing banks, or you think about a specialized bank or an ARC or any other appropriate organization where these assets can be resolved. There are certain arguments for a kind of concept which finance minister spoke about and constituted a committee. Today, for the same borrower, 15 PSUs have lent. All of them are trying to recover their one. It would be perhaps far more efficient if their loans are consolidated in one place and a more professionally tasked or oriented manager or organization takes care of those assets.